Okay, the last topic for the term is the determination of the weighted average cost of capital, the discount rate, the rate of return that's used for capital budgeting. We said that when we work with capital budgeting concerns or capital budgeting itself, we need to get the present values of the cash flows. We use the cash flows and we discount it. Now the question is, what discount rate do we use? The discount rate that's used is what we call the weighted average cost of capital. Okay, so for this chapter, kindly read through the chapter. I'll just show some of the aspects here, but you're supposed to read chapter 19. So how do we compute for the weighted average cost of capital? It's also called after-tax WACC or after-tax weighted average cost of capital. Why is it after tax? If you take a look at this formula, okay, the weighted average cost of capital is your cost of debt. R sub D here is your cost of debt. This is the cost of borrowing funds. And then we net it with the tax, 1 minus tax rate. Okay, and then D over V, this is the debt divided by the value of the total assets. So this is the weight of the debt. Or in other words, how much of your market value of your assets is financed by debt. And then this one is the cost of equity. And then this is the weight of equity. Okay, so that's why it's called weighted average cost of capital, because we get the weights of the debt and the weights of the equity. And then we multiply the costs of each. Now take note that it's the cost of debt where you get the after tax. So this is 1 minus tax rate. For the equity, you don't get the 1 minus tax rate. Okay, why? Because for debt, if you recall, when you construct your income statement, tax is the interest expense. The use of debt, which incurs interest expense, is tax deductible. So for example, if you have net income before tax, okay, or if you have EBIT, that's earnings before interest and taxes, you first subtract your interest expense to get your earnings before tax, and then after that you subtract tax. So which means that the use of debt can give the company tax savings. Okay, that's why the cost of debt is netted against the tax rate. In other words, binabawasan natin yung cost of debt by the tax savings that is generated from the use of debt. So let me repeat that, kasi pag gumamit ng debt, may interest expense. Pag may interest expense, binabawas yun sa earnings before interest and taxes. Okay? Pag binawas yun sa earnings before interest and taxes, and we generate the earnings before tax, liliit yung tax natin. Okay, I hope you remember yung net income after tax at saka yung net operating profit after tax. Okay, so where we did not subtract the interest dun sa NOPAT. So yun din ang concept dito. No? So it's called the after tax weighted average cost of capital, simply because, bakit after tax siya? Kasi yung debt, guys, the debt component of our financing is subjected to 1 minus the tax rate. So this is the debt component, this is the equity component, which forms part of the total financing of a company, diba? So the weighted average cost of capital is the after-tax cost of debt plus the equity cost of debt. And when you add this, you get your WACC, and this is the one that you use for evaluating projects. No? So when you get the present value, it's the cash flow divided by 1 plus, you use the weighted average cost of capital, you use the WACC. Okay, for example, this one, you have Sangria. Okay, Sangria, this is the book value, assets, debt, and equity. And then this is now the market value. Okay, the asset now became 1,000. I think this is the end of the year. So the asset became 1,250, okay? The value of the asset, and then the value of the equity, of course, should be 1,250. Now, this is the market value. So when we compute for the weighted average cost of capital, we use the market values and not the book values usually, okay? We use the market values and not the book values. Okay, so if you take a look at this one, cost of debt, okay, this is an example computation. Cost of debt is 6%. Cost of equity is 12.5%. And notice, guys, that cost of equity is more expensive than cost of debt. Why is that so? It's riskier to put your money in equity compared to debt. Okay? Yung debt, guys, fixed lang yan, ilang number of years, no? Tapos may ano yan, may interest payments, no? Yung equity, walang fixed number of years yan. Tapos walang interest payments, walang assured na may return ng cash, no? Ang debt every year or depende dun sa frequency ng depende dun sa term, magbabayad ng interest yung borrower. Sa equity hindi. Okay, alam natin na ang returns dito yung dividends at saka capital appreciation. Okay, then we have the tax rate here. So how is the weighted average computed? Okay. If the if the amount of debt is 500, we divide it by the total. Ito yung example sa taas, no? Yung value, market value. Okay, and equity naman 750 divided by the market value. So these are your weights. 40% financed by debt, 60% financed by equity. Okay, so in order to compute for the weighted average cost of capital, it will be equal to the cost of debt times 1 minus the tax rate, okay, given yung tax rate natin, times the weight, no? The weight of debt plus the cost of equity times the weight of the equity. Okay, so that's the formula there. So 9.4%, ibig sabihin 9.4% ang gagamitin in assessing long-term projects, capital budgeting projects. Okay, so ito yung ginamit ngayon, no? Suppose ito daw yung mga cash flows. Initial investment, tapos this is cash flow at year 1. Then in order to compute for the for the net present value, and no, see, this is we use this as the weighted average cost of capital. So to compute for the NPV, to compute for the IRR, gagamitin natin yung cost of capital na 9.4%. Ito yung ginagamit to evaluate projects. Yung weighted average cost of capital, where's that? This one. Okay, so all right. So I leave you guys to read this. Valuing a business, okay, hindi masyadong kailangan to. Ginagamit dito yung free cash flow. Okay, but what's important in this chapter, guys, is more on the weighted average cost of capital. Of course, basahin nyo rin to kasi, guys, ang iba-iba yung teachers na magbibigay ng questions sa finals. By the way, your finals is on Tuesday at 1 to 3 ba? Clarify ko na lang tapos ipopost ko sa Canvas. But guys, make sure that ang departmental exams will always take precedence over other exams. So kunyari may exam ka on that date, another subject, please tell your professor that you have a departmental exam on that date, yung 1 to 3 na yun. Okay, so hindi pa pwedeng may precedence, guys, yung departmental exams. Okay, so please don't miss your exams, guys, kasi pag na-miss yung exams nyo, guys, wala tayong make-up for the quiz on Saturday and walang make-up for the quiz for the final exams on Tuesday. Okay. All right. So I leave you guys to read the other portions of chapter 19. Okay. Ito another example ng WACC, but we'll have more examples in Excel. Okay. Just read through the adjusted. So there are only 4 sections, and the 5th section is more on question and answer. and the summary. Okay, so could you please open your Excel file, the WACC exercise? Okay, kindly chat please if you have the Excel file ready. Paki-chat po ng yes, please. Thank you. Let's wait for the others, please. Okay, thank you. All right, so we have 3 worksheets to cover this morning. Okay, so these are just notes, guys. These are just notes that I prepared for this class. Okay, so this is all about capital structure and the cost of capital. Okay, we said that cost of capital is very important because we use the cost of capital or the after-tax cost, weighted average cost of capital in order to evaluate long-term projects or in order to compute net present value, IRR, etc. Okay, so this is just a quick overview. Okay, why do we need to determine the weighted average cost of capital? So you have here an example where a company would like to invest initially 100,000. The useful life of the asset is 20 years. And then it was computed that the IRR is 7%. Okay, and then the least cost source of financing is debt, 6%. Okay, so should the company invest in this one? What do you think, guys? Yung IRR, kinompute nila 7%. Pero ang ginamit nila na cost of capital, yung debt na 6%, yung least cost of financing. Okay. Will the company invest? Okay, if they're using the cost of debt only, itong 6% lang, in order to assess or evaluate the project that has an estimated IRR of 7%, then they will say yes, di ba? They will say yes. Kasi yung IRR mas malaki sa cost of debt. Okay? Now, on the other hand, ito naman, isang project, kinumpute nila yung IRR 12%, tapos ang tinignan nila yung cost of equity na 14%. Okay, now in these 2 cases, mamamali yung decision nila. Why will they have wrong decisions here? They will have wrong decisions kasi ang ginagamit lang nila yung either sa unang case, ang ginagamit lang yung cost of debt lang. Okay, the basis in the first project is just the cost of debt, yung 6%. On the other hand, yung sa pangalawa, ang basis niya yung equity lang na 14%. Okay, which is wrong, no? So dapat pag and there are many solid reasons, both theoretical and practical reasons why ang ginagamit na rate to evaluate a project is your weighted average cost of capital. Hindi pa pwede yung debt lang. In this case, 6%. Hindi pa pwede yung equity lang na 14%. So dito sa case na to, malulugi yung company dito assuming na ang weighted average cost of capital is greater than 7%. Kasi ang ginamit lang nila yung cost of debt lang as a basis. So kinompare lang 7% to 6%, And based on that, okay yung project. When in fact, dapat ang ginamit nila dito yung weighted average cost of capital. If the weighted average cost of capital was 10%, then the project should have been rejected. Okay? And itong proposition na to will destroy shareholder value. Okay? Dito naman guys, baliktad. Ang IRR 12%, tapos ang ginamit nila cost of equity 14%. Okay? Usually guys, yung cost of debt is lower than the cost of equity. Okay? Because of the risk involved in cost of equity, no? So had the weighted average cost of capital been lower than 12%, okay? Kasi pag ang cost of debt kunyari 8%, mas mababa yung WACC kaysa yung 14% na cost of equity. So mali din decision dito. Okay, so nasayang yung potential na investment na mag-create ng shareholder value because it did not make use of the correct or appropriate cost of capital, okay, which is the weighted average cost of capital. Okay, so I'll leave you guys to to read the other portions here, but suffice it to say that as the above example clearly illustrates, using the piecemeal approach. When you say piecemeal approach, guys, ito cost of debt lang ginamit. Ito cost of equity lang. So ang tawag dyan, piecemeal approach, which is wrong. Dapat tinitingnan yung overall cost of capital of the company. So when we use the piecemeal approach to evaluate investment opportunities, it is clearly not in the best interest of the firm shareholders. Okay? Remember that any project that the company engages in should maximize shareholder value. And this can only be achieved if it undertakes projects that provide returns or in excess of WACC. So dapat yung IRR dapat mas mataas kaysa sa WACC. Okay, now in the text guys, hindi naman pinapakita dun kung paano kinompute yung cost of equity. That's in another chapter. But let me just show you yung kung paano kinocompute yung dito yung cost of debt, no? So dapat after tax cost of debt. Okay? I'll give an example later on dito. Papakita natin kung paano kinocompute yung cost of debt. Tapos yung cost of equity, cost of preferred stock. Okay, the computation for the cost of preferred stock is K sub P, okay, or others call this R sub P. Return ng preferred stock is equal to D sub P, dividends, divided by the price of the preferred stock minus the flotation cost. So makikita natin sa isang example yan. And may example dito, no? So dito pinakita kung paano kinompute yung cost of preferred stock. Now it's D sub P. Bakit D sub P? Dividend ng preferred. Kasi guys, ang preferred stock, ang dividends niyan fixed. Fixed yung dividends yan, hindi nagbabago-bago yung ano yan. Kaya parang ano siya, parang debt. Yung preferred stock parang quasi-debt yan eh. Pag quasi, parang it's like a debt, no? So pareho siya sa utang, kunyari sa bonds, in the sense that si bonds fix yung interest, si preferred stock naman fix yung dividends siya. Alright? Then lastly, you have the cost of equity. Okay? So here there are two ways that's shown kung paano i-compute si cost of equity. One way is the constant growth rate model. The other way is the capital asset pricing model. Ito nasa chapter 5 and 6 nasa ano to, di ba? Nasa risk and return. In fact, kasama yun sa quiz natin. I asked questions about that, yung CAPM, capital asset pricing model. But in this case, we're going to compute for the cost of equity using using the constant growth model. Okay? Tapos, so cost of retained earnings, hindi natin gagamitin, no? Pareho lang naman sa cost of common equity yan. Ang difference lang, yung cost of retained earnings, walang flotation cost, which I'll explain in a while. Okay? So, this is the computation for the weighted average cost of capital. K is equal to summation ng weight ng cost ng debt, weight ng debt times cost of debt. Yung weight dito yung after-tax cost of debt. Weight ng preferred times the cost of preferred. Tapos yung weight ng common times the cost of the common stock. Okay, so it's better explained by an example. All right, so let's go here, guys. This is an example. So we have three sources of financing here. May bond yung company. Meron silang preferred data. Okay, gamitin ko na lang ito. Meron silang preferred data. At saka meron silang common data, common stock. So different sources of financing. Okay, now we would like to compute for the weighted average cost of capital. Okay, so how do we compute that? Okay, first, yung price ng yung debt ngayon, ang price niya, market value niya to, no? Mga market values to, no? The market value is 904.53. Si preferred naman 100, si common 70. So currently the company has 400 units of debt, 1,000 shares ng preferred at saka 10,000 shares ng common stock. Okay. Given this information, okay, how do we compute for the weighted average cost of capital? So dito natin lalagay yung dito na lang. Okay. We need to compute for the weighted average cost of capital. Okay. So how do we do it? All right. Sa debt, guys, kailangan natin ma-compute yung cost of debt using the rate function. Okay, we have encountered this, no? Yung rate function na to. So, ngayon, we just need to understand ano ba yung tenor ng debt na to? Ano yung tenor niya? So, ang sabi, ang debt daw, it will mature in 10 years. Okay? Ang utang, ang face value, ang nakalagay dun sa kontrata, may utang yung company ng 1,000. No? Tapos may interest, may interest yan. May interest siya. Okay? Tapos may flotation cost. Ano ibig sabihin ng flotation cost? Nangutang yung company, okay? Ang price, ang nakuha niya is 904.53. Okay? Pero ang utang niya 1,000. Okay? So I hope you get this, ano? Parang nangutang ka, ang nakalagay dun sa utang mo, sa face value, sa kontrata, na ang utang mo 1,000. Pero magkano lang nakuha mo? 904.53 lang. Ibig sabihin, guys, this bond is selling at a discount. Naka-discount siya. Bakit? Kasi 1,000 yung sinabi yung utang mo 1,000 pero ang nakuha mo lang 904.53. Oh, is that possible? Yes. Yes. One possible reason is that risky yung bond ng company na yan. So kung mangungutang siya tapos hindi niya ibibigay at a discount, baka hindi siya makahiram. Okay? In fact, ang makukuha niya hindi 904.53. May flotation cost. Ano ibig sabihin nun? Ang ibig sabihin nito, guys, I'm speaking in layman's term, ano? Hinire niya yung services ng mga investment firms, ng mga financing companies para i-float yung bond. Ibig sabihin ng float ng bond para mangutang, no? Tapos ang price ng bond is 904.53 pero babayaran pa nila yung investment firm yung nag-float ng bonds for them ng 1%. So in effect, hindi 904.53 makukuha niya but only 99% nito. Kasi parang may fee to, may fee na 1%. Okay, so how do we in order to understand this, ganito, i-plot natin, no? 0, 1, 2, hanggang 10. No? I-plot natin yung cash flows para mas maintindihan natin. Kasi mas madali ma-compute yung cost ng bond kung naiintindihan natin yung cash flows. Okay, so let me plot this. Okay. First, manghihiram sila, no? The company will borrow money. Okay? Sa paper, ang hihiramin nila yung 1,000. And this will be paid, yung principal nito, babayaran nila to at the end of 10 years. No? Okay, so how much will be their cash inflow? Kasi mangungutang sila, makakuha sila ng 904.53, pero hindi lahat yun. No? It will only be 99% of 904.53. Okay? So what they're going to get is only 895.48. Okay? All right, next. Anong mangyayari sa cash flows? What will happen is that they will have to pay 10% interest rate. Ito yung interest rate ng bond, no? Okay, 10% ng 1,000. So babayaran nila yan every year hanggang year 10, no? So how much will this be? Is equal to, okay, so that's 1,000 times 10%, no? 1,000 times 10%, and then negative siya. Lagyan na ng negative kasi babayaran nila yan, palabas yung pera, no? All right, and then let me just fix this. Fix na lang yung ano lang, yung column. Okay? So yung 100 na yan, guys, for 10 years babayaran nila yan. 100, 100, there. Okay? All right. And at the end, guys, magbabayad po sila ng ano? Magkano ibabayad nila? Yung 1,000 na to, yung principal, no? Ayan. So this is the cash flow. Ito yung cash flow ng ano na to, ng bond na to, no? Merong cash inflow muna sa year 0 kasi nangutang sila, and then ito yung mga babayaran nila, no? This is what they're going to pay. They're going to pay for 10 years. This is an annuity, di ba? And another one, 1,000 at the end of 10 years. So, present value, ito, annuity, and future value. Okay, so hahanapin natin yung rate. Okay, so let's use now Excel's function rate. All right, N per. Ano yung N per natin? 10 years, di ba? Kama. What is your PMT? PMT is your annuity, di ba? And let's use cash outflow negative, no? So it's negative 1,000 times 10%. There. So that's your PMT, negative 100, no? Tapos ano yung present value natin? Ito, this one. Our present value is, nangutang tayo ng 904.53. Kaso, may flotation cost yan, no? Minus yung flotation cost, yung babayaran natin dun sa mga humiram para sa atin, no? Yung mga financial institutions. All right? And then future value, okay, so ginawa kong positive yung present value, no? Yung future value is negative 1,000. Ito yung babayaran natin. Okay? And then the type ignore kasi, yung type ignore natin kasi annuity ordinary naman to, no? That's the assumption. Okay, okay. And then, dapat after tax, guys. Tignan nyo to, ha? So this is the before tax, 11.837. Okay. Remember, guys, ang utang, may tax savings yan. So, binabawas natin yung 1 minus, what's the tax rate? The tax rate is 30%. There. Okay. So that's your after-tax cost of debt. So instead of 11, ang cost of debt natin is 8.286 lang. Yan ang cost of debt natin. Okay? So let me pause for a while. Okay, kunin ko lang yung formula text dito. Okay. Mas maganda nga, guys, binibigyan ng pangalan to, no? In fact, we can do that dito. Control Shift F3. Lagyan ko ng pangalan. Left column. Control Shift F3. Gave them names. So that pag kinuha natin itong B12, the B12 is, that's your maturity, no? B11 face value, B10 is your coupon rate, B3 is your debt, B13 is your flotation, B11 ulit is your face value. There. Okay, so let me pause for a while, allow you to work on the formula, and then once you're done, guys, paki-chat, please. Okay, good, good. Thank you so much. Let's wait for the others. I hope the others will also give their feedback. Good, thank you. Let's give your classmates a few more seconds. Okay, how about the rest, guys? Paki-chat naman please kung nakuha niyo yung answer. Yung cost of debt natin after tax cost of debt. Okay, thank you. I hope the others are able to follow. All right. So we were able to compute already for the after tax cost of debt. So yung after tax cost of debt, guys, it just involves understanding yung cash flow. Ano ba yung tenor ng debt, no? So dapat alam natin kung magkano yung price, yung binayaran, yung binayad sa atin. Okay? This is, sabi nga natin, this is bonds, a type of bond discount, no? Discounted bond to. Kasi yung nakuha ng company, yung hiniram ng company is lower than the face amount. If it's greater, guys, kunyari 1,100, then that's a premium bond. So may discount bond. Meron tayong premium bond. Meron din par bond. Yung par bond, guys, what we're going to get is 1,000. Yun ang binayad ng mga borrowers. All right. So let's go now to preferred stock. Yung preferred stock, guys, madaling kunin kasi you just get the dividend divided by the price now minus the flotation cost. Sabi nga natin yung dividend na to, guys, it's fixed. Kaya D sub P lang siya. Unlike yung common stock na may growth rate siya, no? Pwede nagbabago-bago yung dividend ni common stock. Okay, so let's compute now for the cost of preferred stock, and it's equal to how much is the dividend? Okay, so that's constant divided by how much is the price of the preferred? Ang price daw ngayon 100. Okay, and then may flotation cost na 2%, so which means yung price niya ngayon times 1 minus yung flotation cost na 2%. Ibig sabihin, hindi lahat ng 100 makukuha. No? Okay? Kasi may flotation cost. Pag nag-issue ng preferred, newly issued, you only get 98% of 100. Okay? Alright, so that's 10.2%. Okay, paki-chat please kung okay, clear. Appreciate ko guys kung mag-feedback kagad tayo kasi may dalawa pa tayong worksheets na kukunin. And we only have 45 minutes, so babudget natin yung time natin. Ito mas mahaba-haba ng konti. Okay, but it's almost the same as the first problem. All right, clear guys yung cost of preferred stock. And we notice that the cost of preferred stock is is greater than the cost of debt. Generally, guys, ang preferred stock or common stock, mas mahal kaysa sa debt. No? Okay, questions, guys, about the cost of preferred stock? Kindly chat, please, if you got the answer. Okay. Thank you for that response. Isa pa lang. How about the others, guys? Okay, thank you, Adriana. Henry, thank you. And Chiron, thank you. All right. Lastly, guys, you have cost of common equity. Okay, yung cost of common equity, parang pareho lang siya ng ano, no? Pareho lang siya ng cost of preferred. Okay, ito itong denominator parang ano din yan, parang minus flotation cost lang din. No? It's the same. Okay, so the cost of common stock is equal to the dividend at the next period, D1. So this is not D0. D1, equivalent dito, D1, dividend after one period. Okay, dividend after one period to. Okay, so let's compute for this. Now, ang alam natin D sub O, ito D sub O to, 3.96. But the equity, the dividend is expected to grow by 6%. So D1 will be equal to DO, okay, times, mag-grow siya ng 6%. Okay, so this is D1, guys. D1, dividend after 1 year. This is dividend at time 0, 3.96. Yung dividend ngayon, and the growth rate is expected to be 6%. Therefore, we let the dividend grow by 6%. Okay, and then divided by, what's the price of the common stock now? The price is at 70. Okay, 70. Tapos, dapat, hindi niya makukuha lahat yan, ano? Because there's a flotation cost of 5%. There. Okay, so this is your numerator, D1, divided by the price of the asset less your flotation cost, and then we have to add yung G. Oops. So this so D1, so D times 1 plus F10, okay, divided by dapat ginawa ko itong pinasok ko sa parenthesis para yung buong amount nito divide dito. Okay, so I think this will now be correct. Oops. Ulitin natin, ha? Okay. Let me repeat the formula. So D1, what's our D1? I-parenthesis natin para ano. Our D1 is D0, okay, times mag-grow siya ng 6%. Okay? So this is our numerator. And then divided by our denominator is the price of the stock now. It's 70. Okay? Kaso hindi lahat yung makukuha. Mababawasan siya ng 5%. Okay? Tapos dapat i-add natin yung growth rate. Okay, we add the growth rate. Okay, mali ako kanina. Dapat nagawa kong plus G itong 3.96. Okay, so this should be correct already there. Okay, plus ko ulit. Alright, so it's the price, it's a dividend. Ang binigay kasi sa atin, dividend at time T, 0. No? Kailangan natin dividend at time 1. So that's the dividend, expected dividend for next year. Dividend times 1 plus the growth rate, okay, divided by magkano yung net price? It's 70 times 95% ng 70. And then plus the growth rate. Okay, then you have 12.31%, which is higher than the cost of debt and the cost of preferred stock. Okay, so let me give you a few seconds to work on that. When you're done, guys, paki-chat na lang, please. I'm trying to see if kailangan natin i-budget yung time natin kasi dalawa pa yung ano natin, worksheets. Guys, meron bang nakatapos na? Paki-chat naman, please. Okay, thank you, Ed. Julian, thank you. Waiting for the others to give their feedback, please. Thank you, Patrick. Let's give your classmates a few more seconds. Brianna, thank you. Lian, thank you. Okay, although I'm not getting as many responses as I would want, but it's okay. A few more seconds, guys, and then I'll proceed. Dalawang worksheets pa tayo. Okay, thank you, Joaquin. All right, so now we have your cost of debt, no? So meron na tayong cost of equity, meron na tayo. So meron na tayong cost of debt, meron tayong cost of preferred stock, meron tayong cost of common stock. So isa na lang, kukumpitin na lang natin yung weighted average cost of capital. So we have to compute for the weights, no? Kasi yung weights na to, i-multiply natin sa mga corresponding costs nila. Okay, so let's first compute for the total market value. And this is simply the price multiplied by the units. No? Tanggalin lang natin yung dollar. Okay, so okay. So copy ko lang to, no? So you were just multiplying the price multiplied by the number of units. Okay, and then the percentage, okay, how do we get the percentage? Okay, ang long cut, sum natin to, tapos kukunin natin yung proportion. No? But the shortcut could be this divided by, sum natin dito, sum of this Tapos we're going to fix the row. Tingnan natin to. May 2 decimal places lang. Just make this 2 decimal places. Okay, so again guys, itong total market value, minultiply na lang natin yung market price, kasi market price to, times the units, you get the total market value. Tapos yung percentage is simply the total market value divided by the sum lang ng mga to get the weights. So this is your weight. So yung weight ng debt is 3.5, weight ng preferred is 8.8, weight ng common is 87.7. So pinakamalaki yung sa common in this problem. So these are the weights. Okay, paki-chat nga please guys kung nakuha na itong total market value at saka yung percentage of total. Market value for the preferred, multiply lang. Multiply lang natin. Yung debt, ay wait, sorry mali ako. Wait, sorry. Okay, mali, no? I cannot copy this formula kasi ginamitan ko ng debt, no? Okay, so let me, thank you so much. Mali itong formula natin. So for this one, preferred times the units. Yeah, I was wrong there. For this one naman, common times the units. Yan ang disadvantage minsan kung pinifix natin. Okay, so this is the correct percentage. Apologies guys. So it should be this one times this one sa preferred. So hindi natin pwedeng i-copy itong formula kasi naka-peg dun sa sa debt. Sorry about that. Okay. Thank you for that question. Okay. So any more questions, guys? Okay. Therefore, guys, since we have the weights and then we have the individual costs, then we can already compute for the weighted average cost of capital. Dito na natin ilagay. So, ang weighted average cost of capital natin is simply, diba, this times this, plus this times this, plus this times this. Ganun lang. It's the summation of your WACC. Weight times the cost. Okay? Kaya ang tawag sa kanya weighted average, after-tax weighted average cost of capital because we get the after-tax of your debt. So, this is just your sum product ng rates and yung mga costs of financing natin. All right. Okay, so ito guys yung natin. This is our weighted average cost of capital. After tax, weighted average cost of capital. After tax. So our after tax weighted cost of capital is 10.88%. So ito dapat yung gagamitin natin guys sa Ito yung gagamitin natin sa pag-compute ng capital budgeting problems. Not the cost of debt, not the cost of preferred stock, not the cost of common stock, but the weighted average cost of capital. All right? Okay. So, I guess okay lang tong formula natin, sum product, madali lang naman yan. Multiply lang natin. Okay, next. Let's have another example, similar lang din. Similar lang dito sa problem natin. Okay, we're given that the tax rate is 30%. Ito na naman si bonds, no? 10% yung maturity. Coupon rate is 9%. Face value is, may frequency to, no? Frequency 2. Face value is 1,000. Price is 945. Okay, this means that the bond is selling at a discount. Gawin natin ano, ibahin natin. No? Gawin natin itong 1,005. Okay? So the bond is selling at a premium to, no? Premium. Premium bond to. Okay? Premium bond kasi the borrowers should be willing to pay 1,005 for this, pero ang ibabayad sa kanila at the end of 10 years is 1,000 lang. So premium bond yan. Okay, so again, i-plot natin guys yung ano para intindihan natin. 10 years to kaso, frequency 2. So ibig sabihin semi-annual to. No? Therefore, pag semi-annual, 0, 1, 2, 3, hanggang 10 years times 2, that's 20. Yan. Okay, so ganito yung cash flow niya guys, ha? 20 years, no? Okay, initially, so nanghihiram tayo, di ba? So 1,005. So this is cash inflow, manghihiram tayo ng 1,005. Pero may flotation cost siya na 2%. Yan. So ang makukuha talaga natin 984.9. Okay? Although syempre ang pag-record natin guys, ang pag-determine kung premium siya o discount is the actual price, no? 1,005. So this is a premium bond. Kanina yung example natin, discount bond. Okay, so ano yung mga babayaran natin? So this is inflow, ano yung mga outflow natin? So it's equal to, yung interest natin is the face value, okay, times coupon rate of 9%, then divided by 2. Divide by 2. Bakit? Kasi every 6 months, no? Every 6 months. All right, so that should be tapos dapat negative, no? Negative. Okay, so negative guys, negative yan, 20 years. 20, not 20 years, 20 periods magbabayad tayo ng 45. Okay. Sorry. Okay. Dapat finix natin. Fix lang natin lahat. Okay, so 45, 45, 45, babayaran, no? Yung interest payments. And then at the end of the 10-year period is equal to negative. Magbabayad tayo ng face ng bond which is 1,000. Okay? So ito guys yung ano, ito yung cash flows involved with this bond. Okay? So once you understand guys the cash flows, ang daling i-compute ng ano, ang daling i-compute ng cost of debt. No? Intindihan na natin eh. No? So let's first compute for the yield to maturity. Okay? Yung yield to maturity guys, yung wala pang, hindi pa natin may minamanage yung tax. No? So this is equal to so this is equal to rate. Rate again guys, rate. Okay, ano yung NPER natin? Ang NPER natin will be 10 years times 2. Okay, 20 periods yan. No? Although 10 years siya, kaso semi-annual. Eh. So 20 periods. Kama, ano yung payment natin? Ano yung interest payment? It will be yung face value na 1,000. Okay. Negative ko to ha. Payment is negative 1,000 times ano 9% and then divided by 2. Okay, so that's your 45. Kama, what's the present value? Present value is positive 1,005 times 1 minus the flotation cost. Yan. Okay, that's the present value. Yan yung 984.9. Positive siya. And then future value is negative, once again, negative 1,000. Okay? So that's it. That's the rate. Kaso, itong rate na to guys, semi-annual to. So dapat i-multiply natin ng 2 ulit para maging annual. Okay? Control Enter. So our cost of debt is 9.23%. And then, ang kailangan natin yung after tax. 1 minus the tax rate. Okay. So ang gagamitin natin guys is this one. Hindi ko na Google. Okay. The after-tax cost of debt is 6.46%. Flash ko muna ito. Then once again guys, please feedback. We're running out of time. Last natin yung iOS. Kindly chat please guys kung nakuha na yung yield to maturity. That's the cost of debt then. Another name for the cost of debt is your YTM, yield to maturity. Okay, but feedback please guys, pa-chat naman kung nakuha yung yung cost of debt. Okay, good. Thank you so much. Thank you so much for the feedback. Okay, so ang gagamitin natin guys sa pag-compute ng WACC, itong after-tax cost of debt, itong 6.46. Alright, then let's compute for the preferred. Ganun din siya kanina. Ito din naman yung formula. So our cost of preferred is equal to the dividend. Okay, dividend. Notice yung dividend, D sub P lang yan. Hindi siya nag-grow, no? Kasi fixed yung dividend ng preferred. And then we divide it by ano siya? The price of the preferred. Ito yung price. And then, kailangan ibabawas sa ating flotation cost na 3% yung flotation cost. Okay, so it's only 97% lang. No? So, ibabawas natin 3% cost. Okay, so cost of preferred 9.07%. Lastly, guys, yung common equity. Okay, dito ang binigay sa atin yung D1 na. No? Okay, so hindi na natin kailangan i-multiply ng 7% kasi D1 na yung binigay. This is the projected dividend already at year 1. Okay, so how do we compute for this? D1 is 1.25. Okay, and then we divide it by, the price is 41.5, but we have to subtract the flotation cost of 8%. Okay. And then we have to add the growth rate of 7%. Okay, let me just increase the font. Once again, guys, paki-chat kung okay na. Waiting for your response, guys. If you're able to get it, kindly chat, please.
Sir, you're muted po, sir.
I'm sorry. Okay, namit pala ako. Alright, so let me go back, no? Yung market value natin will be simply magkano yung ilang shares outstanding multiplied by the market value niya, no? 240,000 shares outstanding times the price, 4150. That's our market value for common. For preferred naman, ilang shares, 25. Then multiplied by the price of the preferred is 125. So market values to, no? Tapos si debt, 3,100 units ng bond multiplied by the price of the bond, which is 1,005. Okay? So with that, guys, nakuha natin market value. Pag alam na natin mga market values, alam natin mga weights. Kasi kukunin lang naman natin yung total nito tapos i-divide natin bawat isa. So shortcut yan sa Excel without getting any more the total sum. Okay? So yung market value divided by the sum of each of the individual components. So here we can see that yung financial ng company, 74% yung common stock, 23% yung debt, maliit lang yung sa preferred stock, 2%. Okay, and then yung cost of financing, we just got it from what we computed a while ago. Ito. Kinapi lang natin, taas. Ito yung nasa cost of debt sa taas, yung after tax, this one. Right? And then, ano lang, simple arithmetic na lang, multiply na lang yung weight times the cost, weight times the cost, weight times the cost, and that can be done easily sa Excel sum product lang. Okay? Alright? Tapos ito yung gagamitin, guys, sa capital budgeting. Ito na yung required return, ito na yung weighted average cost of capital. Which before, I just gave it to you, no? Ito yung weighted average cost of capital. Ito yung gagamitin natin na discount rate. So it's wrong, guys, to use just the weight of the common stock. It's wrong just to use the cost of debt. It's always the weighted after tax weighted average cost of capital. So this is your after, just to clarify, after tax ton, after tax weighted average cost of capital. 80 stands for after tax. After tax weighted average cost of capital 9.36. Okay, my questions ba? Yes, sorry, Julian. Okay. All right. Okay, so clear, guys. Paki-chat naman, guys, kung nakuha nyo itong 9.36% dito o yung kanina dito, yung 10.88. Okay, so it's actually easy, no? Pag alam nyo yung concept, kung paano, ang pinaka medyo parang challenging dyan, yung cost of debt. Eh. Pero, if you know, guys, what's happening, okay? Kasi utang, may babayaran tayong interest, may babayaran din tayong principal sa dulo. Tapos sa simula, magkakaroon tayo ng cash kasi nangutang tayo. Di ba? Tapos rate function lang. Then, it's really simple. It's really simple to do. Okay, kindly chat please, guys, if you were able to get 9.36% or kung walang questions. Because pupunta na tayo dito sa last, exercise. Good, good. Thank you. Thank you, guys. Thank you for those of you who are always giving feedback. I really appreciate. No? Salamat. Okay. Very good. Very good. Salamat. Hanggang talagang last day of classes, talagang napaka faithful nyo sa pagbigay sa akin ng feedback. And I really appreciate that. So thank you so much. All right. So lastly, guys, ito, investment opportunity schedule. Okay, so medyo ito, guys, ito may hinide ako dito, no? So click iOS, click it and then unhide. Kikita itong iOS 2. Okay. Wala, nasa na yun? Wala. Ayan, yan. Okay? Okay. Begin with the end in mind. Ito, guys, yung generate natin. No? Ito yung tinatawag na investment opportunity schedule. Okay, binigay ko na yung answer just in case na but we're going to do this. This, guys, ito, okay, this is plotting your IRR and your budget. Okay? So kunyari, kung ang budget natin is only up to 1 million. No? So up to 1 million. Ito lang yung ang budget natin 1 million lang. Therefore, ang pwede lang na projects natin itong dalawang to. Kasi kung isasama natin yung pangatlo, then hindi na aabot, no? Kasi total ano to total cost eh. So ano yung mga projects yan? It should only be project H and G. Sila lang. Okay, this is what we call the opportunity investment opportunity schedule. Okay, so let's learn how to do this. Okay, so okay, 15 minutes kaya natin to. So first, let's copy this para ma-preserve lang natin tong data na to. Control C, Control V. Okay, so I'm copying it, no? Okay, and then lagay ko dito yung steps, no? Copy the table. And then number 2, sort according to. So sort natin high to low. Okay, so let's sort this, guys, kasi gusto natin malaman sino ba yung priority natin dito, no? Sinong pinakagusto natin. Siyempre, guys, ang pinakagusto natin yung highest na IRR, no? So let's highlight this data and then sort natin by IRR and then largest to smallest. Okay, so we can see here that IRR H, no? H, then G, then I, B ang pinakamaliit na IRR. Okay, now ang gagamitin natin, guys, iunan ko lang dito to para may space pa tayo. Here. Okay. What we will be needing, guys, is the cumulative. No? Highlight ko to. I-accumulate natin yung cost. So, sabihin natin itong total cost. So, it's equal to, you remember how to cumulate, guys? Sum of this colon, diba? Then we fix the row. There. So, lagyan ko lang ito ng copy ko lang yung okay, so kukumulate natin ito. Yeah. Okay, so what does this mean? Ibig sabihin lang nito, guys, if we want project H and G, so dapat ang total cost niyan 803,000. Kung gusto natin hanggang kay J, kailangan natin ng up to 2 million, 1.96 million kasi ito. So kinumulate lang natin yung mga cost ito. We just cumulated it. Okay, clear so far, guys? Cumulated lang to, no? We just added. Okay, so I will separate this. Okay, ito lang kailangan natin, itong dalawang to. Si total at saka si IRR. And then, I'm going to Control C. Okay. Paste values. Tatanggalin ko yung formula, guys, no? Kasi i-manipulate natin to. Lagyan natin dito 3 cumulate cost. Cumulate cost and then separate copy as values and then separate. Guys, one moment. Alright. Okay, so sineparate na natin. Kasi ang gagawin natin, guys, in order for us to be able to do this, okay, tingnan nyo guys, oh, may stepwise function siya. Okay, how do we do that? To do that, guys, ang gagawin natin, kailangan natin ma-plot. So mag-i-insert tayo dito. Ang gagawin ko dito from 0, no? Okay, from 0, bali from 0 to 40769, dapat yung IRR natin 16.51. Okay, ulitin ko lang yung kwento ah. So nag-insert ako dito guys ng ano ng nag-insert ako dito ng column. Ito. 0 16.51. Ibig sabihin from a total of 0 up to 407,769, yung IRR natin ito 16.51. So we're going to repeat the process. Mag-i-insert tayo. Bali yung breakpoints natin, no? So ito i-copy down ko. So in between the points, guys, naglalagay ako ng ano, naglalagay ako ng space. Okay? Para ma-plot natin yung horizontal line na yan. Okay? This one. Sorry guys kung ano kung tuloy-tuloy lang ako kasi nahabulan natin yung time. I'm sure you'll be doing this on your own. So naka-record na. Okay, so paano to? Paano to? So paano natin mapaplot yung 407,769 hanggang 803,978? So the technique is ika-copy natin to, copy this one. Okay? And then magdadagdag ako ng 0.01. Isang centavo lang, no? Okay? And then it will be equal to 16.16%. Okay, let me copy the format. Okay, so ulitin ko ah. Let me repeat. Ito guys, ito yung previous cost na 407,769, magdadagdag ako ng 1 centavo. Okay, that will cost the break point, no? Tapos ang ano niya, ang IRR niya, dapat yung previous itong susunod na IRR, 16.16. In other words, guys, from 407,769.01 up to 803,978, ang IRR natin yan 16.16. Okay, so this one now, how did we get this one, which is adding 1 centavo to the previous, and then copying the next IRR. We can now copy this. Control C, Control V, Control V. Ika-copy na natin sa mga in-insert natin na ano na mga rows, no? Okay, there. Alright, yung mga brown na yan guys, na finormat natin para alam natin ito yung mga breakpoints natin. So we can now plot this. Okay, highlight natin. Highlight natin to and then insert. Okay, we're going to use this one. Ito, yung scatter, and then this one, yung itong may ano, pwede rin to. Okay. Pwede rin to, no? Pero I prefer, sige, ito na lang. So medyo i-aayusin lang guys yung plot. So ito na actually yung iOS natin. No? We can just fix this kasi masyadong mataas yung ano natin, yung y-axis. Ang pinaka-minimum natin is 11.48%. So pwede natin baguhin this one. I'll change this. Format major axis and just make it 10%. Para hindi masyado mataas, 10%. There. Okay. And then maybe we can delete na natin itong point nito. format data series, and then dito yan. Dapat yung marker yun. Okay, ayaw. Never mind that. Depende guys sa preference nyo. Kunyari ito. Okay, so what's this? No? What's this investment opportunity schedule? Can change this to investment opportunity schedule. Okay, so we can make this ilagay tayo ng add axis labels, axis typos. So dito, this is your IRR. And this is your total cost, total investment. Okay. Pwede nyo na you can just pwede nyo baguhin yung format o yung design. Balik ko sa block. Okay. Okay, anyway guys, okay. So, pangit naman. Okay, ang ibig sabihin lang nito guys, from if your budget is only up to 500,000, ganito yung budget. Ang pwede lang natin i-gawin is project H. Okay, kasi ito lang yun, ano? Ito yung mga guide natin sa project natin. Okay. Actually, you can put here H, H, G, G, etc. So, kung ang budget natin is only up to 803,000, kasi ito 803,000 to, no, this one. So we can only choose project H and G. Okay, so in a nutshell, this is your investment opportunity schedule. So depende dun sa budget natin. Okay, assuming that these projects are independent, then this will show us kung ano dapat yung pipiliin na projects. Okay. All right. So that ends. Any questions about this? It's already time. So that ends, guys, our discussion for this term. Yung quiz natin on Saturday from 2 to 3:30. Please take the quiz. No? Okay. So thank you so much, guys, for the term. Ito na yung end ng term natin. I hope you learned something sa term natin, despite the fact that tayo from home. Sana yung mga diniscuss natin makatulong sa inyo later on, many of which were practical and skill building in terms of Excel. Okay, with that guys, I stop recording already.